Welcome to the biggest scam in human history, and spoiler alert, you're getting robbed every single day. Now before you click off thinking this is some conspiracy theory bullshit, stick around because I'm about to blow your mind with how money actually works. And trust me, after watching this video, you're gonna look at your bank account very differently. So we got three main players we gotta keep track of here. We got the government, we got the banks, and we got you, the sucker who thinks your money is actually yours. Okay, the government prints money, banks create money out of thin air, and you work your ass off for pieces of paper that have zero intrinsic value. But here's where it gets interesting. Most people think money works like this. The government prints dollar bills, puts them in circulation, and boom, that's how we get money in the economy. Wrong. Dead wrong. That's like saying babies come from storks. The reality is so much weirder and more messed up that it sounds like science fiction. Here's the truth that nobody wants to tell you. When you go to the bank and take out a loan for a car, a house, or whatever, the bank doesn't actually lend you money that already exists. They literally create new money out of nothing and give it to you. I'm not kidding. They type some numbers into a computer and poof, new money exists in the world. Let me break this down because this is where most people's brains explode. You walk into a bank and say, hey, I want to borrow $50,000 for a car. The banker doesn't go to some vault in the back, count out 50 grand in cash, and hand it to you. Instead, they open up their computer, type 50,000 into your account, and congratulations, you just participated in creating brand new money that didn't exist 5 minutes ago. But wait, it gets even more ridiculous. The bank is supposed to keep some money in reserve, right? Like, they can't just lend out everything because what happens if everyone wants their money back at the same time? Well, in the United States, banks are required to keep exactly 0% in reserves. That's right, 0. They changed the rule in 2020, and now banks can literally lend out every single dollar they have on deposit. This is where the fractional reserve system comes in, and this is some next level insanity. Let's say you deposit $1,000 into your savings account. Back when reserve requirements existed, the bank would keep maybe $100 and lend out $900. But here's the kicker. When they lend out that $900, they're not giving the borrower your money. They're creating 900 brand new dollars and crediting the borrower's account. So now there's your original $1,000 still sitting in your account plus 900 new dollars in someone else's account. The money supply just increased by $900 because a bank decided to make a loan. The borrower then spends that $900 at a store. The store deposits it in their bank and the whole process starts over again. This is how banks literally manufacture money out of thin air every single day. It's not backed by gold, it's not backed by anything physical, it's just digital entries in computer systems. And the crazy part is, this is completely legal and how the entire global economy functions. But hold up, because we're just getting started with this rabbit hole. Let's talk about what happened during the COVID pandemic when the government decided to go absolutely nuclear with money creation. The Federal Reserve basically said, you know what, screw it, we're going unlimited. They announced unlimited quantitative easing, which is just a fancy way of saying they were going to create as much money as they wanted. In just 2 years, from 2020 to 2022, the Fed created $5 trillion, $5 trillion. That's more money than existed in the entire world just a few decades ago. They used this newly created money to buy government bonds, corporate bonds, mortgage-backed securities, basically whatever they felt like buying. Here's how that worked. The Treasury Department issues bonds, which are basically IOUs, saying the government will pay you back later with interest. The Federal Reserve then buys these bonds by creating new money electronically and transferring it to whoever was selling the bonds. So the government gets cash to spend on whatever they want, and the Fed gets a piece of paper promising future payment. But here's the thing that'll make your head spin. The Federal Reserve is technically owned by the banks, and the government owes money to the Federal Reserve. So essentially, the government owes money to the banks for money that the banks created out of nothing to lend to the government. It's like borrowing money from yourself and then paying yourself interest on the loan. This whole system used to be somewhat tied to reality back when we had the gold standard. Every dollar was supposed to represent a certain amount of gold sitting in a vault somewhere. If you had a $20 bill, you could theoretically march down to the bank and exchange it for $20 worth of gold. That system worked pretty well for a while because it put limits on how much money could be created. You couldn't just print unlimited dollars because eventually people would show up wanting their gold. And if you didn't have enough gold to back up all the paper money you'd printed, the whole system would collapse. But then, in 1971, President Nixon did something that completely changed the game forever. He ended the convertibility of dollars to gold. Just like that, poof, no more gold standard. From that moment on, the dollar became what economists call a fiat currency, which basically means it has value because the government says it has value and people believe that other people will accept it. Since 1971, money has been nothing more than a collective hallucination. It's valuable because we all agree it's valuable, and the moment we stop believing in that shared delusion, the whole thing falls apart. The only thing backing the dollar is the full faith and credit of the United States government, which is another way of saying it's backed by the government's ability to collect taxes and their willingness to use force to maintain the system. This is where things get really interesting because once you understand that money is just made-up numbers in computer systems, you start to realize how much power the people who control those computer systems actually have. When the Federal Reserve wants to help out big banks during a financial crisis, they can just create billions or trillions of dollars and hand them over. When regular people are struggling, well, that's a different story. During the 2008 financial crisis, the Fed created hundreds of billions of dollars to bail out banks that had made terrible bets and lost. These same banks that create money out of thin air every day through lending suddenly needed the government to create even more money out of thin air to save them from their own stupidity. The banks got rescued, but millions of regular people lost their homes, their jobs, and their life savings. The people who actually create value in the economy, who build things and provide services, got screwed, while the people who just move numbers around in computer systems got bailed out. And this brings us to the most mind-bending part of how money actually works. Every dollar in existence, except for the tiny amount of physical cash, is actually debt. When banks create money by making loans, they're creating both an asset for themselves and a liability for the borrower. The money only exists as long as someone owes it back to the bank with interest. This means the total amount of debt in the system is always greater than the total amount of money in the system. It's mathematically impossible for everyone to pay back their debts because there isn't enough money in existence to cover all the debt plus interest. The system requires constant growth and constant creation of new debt just to keep functioning. Think about this for a second. If every dollar is created through debt and every loan comes with interest, where does the money to pay the interest come from? It has to come from new loans, which create new debt, which requires even more interest payments. It's like a giant pyramid scheme where the only way to keep it going is to keep adding more people to the bottom. This is why the economy has to keep growing forever. Not because growth is naturally good, but because the monetary system literally requires it. If growth stops, if people stop taking on new debt, the whole thing collapses because there won't be enough money to service existing debts. And here's where it gets really fucked up. The people who benefit most from this system are the ones who understand it and can game it. Rich people and big corporations don't keep their wealth in regular bank accounts earning pathetic interest rates. They buy assets that increase in value when new money gets created. When the Fed creates trillions of dollars, that money doesn't just sit around doing nothing. It flows into the financial system and inflates the prices of stocks, real estate, bonds, and other assets that rich people own. So while your savings account earns basically nothing and inflation eats away at your purchasing power, wealthy people get richer just by owning stuff. This is called the Cantillon effect, and it's probably the most important economic concept that nobody talks about. The people closest to the money creation process benefit the most, while people furthest away get screwed the hardest. Banks and their biggest clients get access to newly created money first, when it still has full purchasing power. By the time that money trickles down to regular people through wages or government spending, prices have already started rising. So when you hear politicians and economists talking about inflation like it's some mysterious force of nature, just remember that inflation is actually a direct result of money creation. More money chasing the same amount of goods equals higher prices. It's not complicated, but they make it sound complicated so you don't realize you're getting robbed. The really sick part is that governments and central banks know exactly what they're doing. They have armies of economists with advanced degrees who understand this system better than anyone. When they create massive amounts of new money, they know it's going to cause inflation. They know it's going to hurt people on fixed incomes and people who save money. They just don't care because the benefits flow to the people who matter politically. Let's talk about what happened after that $5 trillion money printing spree during COVID. Did all that new money make everyone richer? Hell no. It made everything more expensive. Housing prices went through the roof, food prices skyrocketed, energy costs exploded, and suddenly your paycheck couldn't buy as much stuff as it used to. But if you owned stocks or real estate before the money printing started, congratulations, you won the lottery. The stock market hit record highs, house prices doubled in many areas, and asset owners got massively wealthier. while everyone else got poorer in real terms. This is wealth redistribution in action, but it's not the kind politicians talk about. It's redistribution from people who work for money to people who own money-making assets. From renters to landlords, from savers to debtors, from the productive economy to the financial economy. And the best part is, most people don't even realize it's happening. They blame inflation on supply chains or corporate greed or whatever scapegoat the media is pushing this week. They don't understand that their money is losing value by design as a feature of the system, not a bug. This brings us to something called modern monetary theory, which is basically the idea that governments can create as much money as they want without consequences, as long as they don't create too much inflation. MMT economists argue that taxes don't actually fund government spending. Instead, government spending creates money, and taxes destroy money to prevent inflation. Under this theory, the government could theoretically fund universal health care, free college, infrastructure projects, or whatever else they wanted just by creating new money. The only limit would be the economy's ability to produce real goods and services without causing excessive inflation. Now this sounds pretty good on the surface, right? Just create money to fund all the stuff we need. But here's the problem. Who decides what gets funded, and who decides how much inflation is acceptable? The same people who have been running this rigged game for decades. Plus, MMT completely ignores the distributional effects of money creation. Sure, the government could create $1 trillion to build new hospitals, but that newly created money is still going to flow through the existing financial system and benefit the people who are already closest to the money spigot. The really crazy thing is that most people, including most politicians and even many economists, don't fully understand how any of this works. They think government debt is like household debt. They think banks lend out deposits. They think the Federal Reserve is part of the government. They're operating with a completely wrong mental model of the system. This ignorance isn't accidental. The people who benefit from the current system have every incentive to keep it confusing and complicated. They use fancy jargon and complex explanations to make it sound like rocket science when it's actually pretty simple once you cut through the bullshit. The truth is that money is just a tool for organizing human activity. It's a way of keeping track of who owes what to whom, but instead of being a neutral tool that serves everyone equally, it's been weaponized by the people who control its creation and distribution. Every time new money gets created, it changes the relative wealth and power of everyone in the system. The people who get the new money first become relatively richer. The people who get it last or not at all become relatively poorer. This isn't a side effect of the system, it's the main feature. So there you have it, the biggest scam in human history, laid out in all its ridiculous glory. Banks create money out of nothing, governments print their way out of problems. And you get stuck holding the bag while your purchasing power gets destroyed. The whole system is basically a magic trick, except instead of pulling rabbits out of hats, they're pulling wealth out of your wallet. Now that you know how this rigged game actually works, you can't unsee it. Every time you hear about another bank bailout, every time inflation eats into your savings, every time asset prices go parabolic while wages stay flat, you'll know exactly what's happening and why. You could keep playing by their rules, working harder for money that's worth less every year, or you could start learning their game and positioning yourself on the right side of the money printer. Either way, at least now you know why the house always wins. This whole system is completely insane, but it's the world we live in. The least you can do is understand the rules of the game before you get played, because whether you know it or not, you're already in the game, and the house is counting on you staying ignorant.